Are you trying to figure out how to pay off your student loans in less than 10 years?
And I still can't figure it out.
Well, I'll tell you, I've been over $1 million in debt before, so this is the same formula I use to actually get myself financially free. It can also help you too, not just get debt free, but maybe even financially free as well.
Buy you a drink for saving my life?
Okay, so I'm gonna take a scenario here. Let's just say that you've got $30,000 that's on a student loan that you owe. Okay, so 30,000 bucks here, right? Let's just say it's at 6%. Now, whatever your payment is, it doesn't matter. If you want to pay this off in 10 years, your payment would need to be 333 bucks a month, right? Now, if you want to do it in 5 years, you'll need to pay pretty much about 580 bucks per month. Okay? That's just simply just making your payments. Here's the problem, and then maybe you had a situation like this, because for me, like when I finished college up, actually I dropped out of college with one class to go, became an entrepreneur. Now, money was tight from time to time. I couldn't make more than those minimum monthly payments. In fact, sometimes I put it into deferment. That can be okay from time to time. The key is, can you do something better with your money in the process, right? Because, paying these payments, yes, just like with normal math, it'll get paid off in 5 or even 10 years. But you might have other opportunities that could help you do it faster. And that is, rather than just trying to focus on spending more money to pay it down, can you earn more income to be able to have more money that could essentially pay that off, right? And there's 2 different ways you can do it. One is you earn more income in your job. The secret to earning more money in your job is to find ways of how you can create value for that employer, or if you're in business, for your customers or clients, right? It's always back to how do you serve people, solve problems, or somehow create value in a way that money is just a natural byproduct. So you may want to go to your boss and say, listen, now if you just got a raise last week, maybe this doesn't work. But if you haven't had a raise in a little bit, you might just say, listen, what can I do to earn a raise with you? Don't say, I deserve a raise, I'm gonna strike if I don't. Don't be all dumb about it. Just ask them, like, listen, what can I do that would merit me a raise? And then wait for the answer and then go do that. That's something that my clients have done over and over and over again. And it impresses employers like crazy. They love it. It's like little catnip for them. They just can't stand it. Because if anybody, especially if you're of a younger generation, if somebody actually does that, they're impressed. Like, you stand out in their mind. And that might not just mean a raise, it could mean a promotion or somewhere they could put a better opportunity. So when you come from a place of non-entitlement, you come from a place of service and wanting to add value to whoever pays you, that sticks. And that can get you paid more, essentially helping you pay this off faster. Now, there's the other way. The other way, other than just getting a raise, is how can I earn more money? Now, again, if you're paycheck to paycheck, you probably don't have enough money to invest anyways. I would more lean towards that first thing, which is how do I make more money, get a raise at work, maybe have a side hustle, something like that, like a side business that you could use to help generate more income. That's great. But if, let's just say you have savings, maybe you even have enough or pretty close to pay this off all at once. Although you could do that, I would not recommend it. Why? Because if you have $30,000, and it's only 6%, the crazy thing is, with the way that compounding interest works compared to simple interest, you only need to earn 3% on your money, on that $30,000, to match all the interest you're gonna pay over those 10 years anyways. Actually, it's not even 3%, it's like 2.9. But either way, it doesn't matter. You don't need that much money. You don't need that high of a return. You could literally, even if you had the money to pay it off, you could put that money in a CD at, say, 5%, if you're lucky. I know that's not gonna be forever, but say it's at 4 or 5%, you will earn more interest by the time you pay off that student loan. They call that arbitrage, right? That spread, when you make a higher interest rate than what you pay. And like I said, you don't even have to earn 6% to do it, because compounding interest grows faster than the simple interest as you pay down that loan while you're making the minimum payments. That's what's so essential here, right? Now, what if you earn more than that, right? So let me give you an example. Just 6 years ago, I actually put down on a property $32,000. Just about the same as what your student loan is. $32,000, that includes closing costs and everything. That was the down payment. The monthly cash flow that it paid me at that time when it started was about $320 per month. Now notice, that's almost the same payment as paying it off in 10 years. But wait, there's more, okay? Because as time went on, each year, as that renter renewed their lease agreement with me, that payment went up. 6 years later, guess what I'm now earning on that? I'm now earning, this is net, this is after I pay a property manager. I'm not managing it myself. After I pay the property management fee, this is after I pay the mortgage payment and everything else. I actually am earning now $650 per month. So now I'm earning more than what's needed to pay this off in 10 years. I can actually take this payment right here that I'm earning, take that, use that to apply to my student loan and still pay it off in less than 10 years. But here's the cool thing, guys, because I also bought this property at $134,000. It is now worth $220,000. So it's already appreciated by almost $100,000. Just so you know, my mortgage payment's also been paid down by my renters because that $650 is after I pay the mortgage payment. So I'm taking the rent payment that they're paying me, paying down my mortgage. My mortgage on this thing is now less than $100,000. I now only owe about $98,000. This means I now have roughly $120,000 of equity that I have in this property. So let's just say that I sell this and I even just walk away with $100,000 of net profit. Not only was I able to pay out this loan off early, but now I got $100,000 I can still invest today. So the great thing is I love banks. I love getting cheap interest. And yes, even 6%, even 7 or 8% to me is cheap interest. Because why? Because I'm earning much higher returns with my property. Really, if you look at it overall, I've earned well over 300% rate of return on that $32,000 I initially invested. So the thing is, even if I could pay it off, I won't. That's why I spent 15 years before I finally paid off my student loans. Not because I couldn't afford it, I had more than enough money to do it. But I actually pushed it off. I said, you know what? I don't need to pay this thing off because I will make more money than that. I was actually already able to retire by the time I finally just said, fine, I'll pay this off. That's the great thing. And that's the thing. This is how I actually was able to retire early, younger myself. Now, if you want to go deeper into that, I don't want to go into all those details here, but you want to see more details into that, check out this next video, which is the mistakes that do ruin an early retirement, what to watch out for, and what you should be doing to make sure you can do this like I did.